Okay, so in this video, I'm going to go over how I've been trading futures and specifically oil with prop firms. I've decided to switch it up, stop using my own money for the fact that I want that nest egg. I don't want to be risking it in this type of economy right now. Whether you want to get into political or not, unfortunately, politics does drive and affect the economy, and I just see it as a risk. We see that the Fed does not really know if they're going to raise rates or what they're going to do. There were supposed to be 3 announcements or 3 raises or 3 maybe cutbacks, and they never did. It's already the end of the first quarter, and they're still talking about, or they just don't, they haven't said anything. So anyways, I just want to get into why I've switched over to prop firm trading. In the past, prop firm trading has always been considered risky for the fact that for one, it is hard to trade and be consistent. We already know that 90% of traders fail, and I think it's because of the lack of resources. Well, that was probably in the past, lack of resources and ability to find mentorships or mentors. I think now that learning, self-educating yourself has become a lot more easy and available to you with YouTube. I want to say I definitely can commend YouTubers for getting out there and teaching people. You have to weed out those YouTubers that never traded in their lives and that are just blowing smoke, however. So there is that factor when it comes to finding a the right person to learn to trade from. Anyways, I want to say that with prop firm trading, you have low draw, you have such a tight drawdown, and that's where it gets you. Because if you lose a certain amount, they cancel your account and you're forced to buy another trial. You have to pass and be consistent for so many days. However, there's one company out there that you just pass it, and I think you have to do it again with the same profit factor. There's no minimal no minimal trading days that you have to partake in. You just have to be profitable and make a certain amount, and then they fund you. I've heard people getting paid with them. They have such a huge Discord. It's called blueskytrading.io. You can find those guys. They have a static program even, or a static plan where you pay about 160, you get leverage to 150. And I believe all you have to do is trade, make 2,000 twice. And the drawdown is like negative 800, I believe. So I'm going to teach you how to be more precise, have lower drawdowns, if any, make your money and get out. I call it trade the trend, ride the train, and profit and be happy. Get off at the next stop and call it a day. I'm going to show you using my Stonk Journal. This thing is free. It's called stonkjournal.com. And I'm going to show you my account in the last 3 weeks. It's 3 days, April 23rd starting into yesterday. So my average trades, or my average trading days that I like to be profitable, is about 1,000. If I make $2,000, perfect. I'm not going to complain with even $500 days or $400 days. If you're making that kind of money and you're trading full time, that is your job, and you are doing quite well. Most people have a 9 to 5 and they barely make 200, maybe even 150 a day. If you can make 400 a day within an hour or two, and all you got to do is move your mouse around, have a little bit of education behind your back when it comes to trading, you're doing quite well. In fact, you're doing 10% of what 90% do and fell at. And so that's rewarding. I've went from military to truck driving to law enforcement to trading, hedge fund, back to trading myself independently. We got into a hedge fund. We were in crypto. We did quite well. But I seen where the seating president, no names mentioned, we all know who it is, went against crypto, and for the sole fact that we know why. They want in it before everybody else is, so that they can make their money, they can regulate it and force everybody out and keep you broke. As society, they want you broke. That's how they make money in the long run. It's a game to them. Anyways, I dissolved the hedge fund, realizing that it was too stressful to worry about a team, other people's money, and a government that does not like crypto right now, or that is against you. So if all those are against you, then why do it? I trade independently now, 9:30, 10 o'clock till about 11 o'clock, and I'm done. That's my day. I want to enjoy life, and I think that by sharing this, you guys will have the opportunity to enjoy life as well. Even if you're getting into trading, knowing the right things to trade and how to trade it is fundamentally sound, because I went years, traded since 2012 to learn what I do now and to know what I know now. And it took me that long to improve. And that's okay, because I think the only way to truly win in life is just by doing it. If you make mistakes, that's how you learn from it. You're going to make mistakes. This is a business. And I always tell people, if you lose money, that's okay. It's going to happen. You're not going to win 100% of the time, because numerous factors, but take it as a business lesson. Okay, you're going to make mistakes. If you're in e-commerce and you put up advertising, you spend on advertising and you lose there, the money that you make back into sales, that's the strategy. But you're still putting money out, and that's gone. Now you're in hopes to make sales with it, right? So with trading, if you lose money, that's just education that you take on to the next trade, and you win with it. So the stats, again, this is not 2 o'clock. There's one of the trades that I forgot to switch to PM. But anyways, 9 a.m. to 11 a.m., people in Wall Street at lunchtime, they leave. They come back about 1 o'clock, 1:30, 2 o'clock, and they start trading again. There is other time zones, other areas of the world that futures trade at, but I'm only trading my Eastern time zone of what I'm in. I'm not trading outside of the time zones. I'm not up at night trading or anything. And I don't leave trades on past closing at 4 o'clock, because they could go down. In prop firm trading, you especially do not want that, for the fact that you could be in a loss, and that drawdown factor, if you haven't made enough, that drawdown factor is right there, and you could blow your account out, and you have to restart again. So anyways, let's get back to the charts. I'm going to show you. I used 3. I used 2 indicators, Hall Suite by Oscillator. I literally type Hall Suite in your indicator search bar, and UT bot alerts. A lot of people know UT bot alerts. I like it because I searched the super trend. I've searched smooth Heikin-Ashi alerts, or whatever they're called, ATR, average true range. And I find that for 1 minute that I'm trading, it's a little bit more precise and less fake outs. There's still fake outs, but I'm going to teach you how to get past that as well. And then the oscillator, which is called STC. So these are the 3. There is another, that's Smart Money Concepts by Lux Algo. All these are free. I've switched from using even my own indicators, the Ichimoku Cloud, the revised MACD that I built, that shows the crossover buy sell signals and the inputs that I put are revised to be more precise. I've weeded out most of this. I still do use it, but I've not used the Ichimoku Cloud like I used to, especially for the hedge fund. I don't use that now. I use Smart Money Concepts to know supply and demand zones. And back over here, I use literally the STC and the Hall Suite ribbon, is what I call it, to see the trend. I trade with the trend. All I care about is making a few dollars per move. Okay, so in futures trading, oil specifically, for every 1 penny that the stock moves, you make or lose $10. So it changes $10 per penny. You're trading with 1,000 barrels. So theoretically, this is 77,999 that I'm trading with. Or when it goes to 78,000. Now for prop firm trading, you get leverage 1 to 5 contracts. So it could be up to 79,000 all the way up to 150,000, 200,000, 300,000, etc. They will tell you how many contracts you can trade. The more you trade, the more you make, but you also can lose, because for every penny that it drops or moves up, it's $10. You start adding on contracts, then you times that by 2, 3, 4, 5, whatever. And you can be up several thousand or down several thousand. But this is how you make good money. You look at the YouTubers. I think there's one video in particular that the guy literally went on a plane with another guy. They got into discussion on, hey, how do you make money? And he got into futures trading, energy stocks, etc., or energy futures contracts, etc. All the key players that make large money, market makers, all that, commodities, futures, this is what they're trading. Yes, I like volatility. A lot of people will say, well, I don't like the volatility because it's risky. Of course, where there's risk, there's more reward. That's the way it is in life. The more risk you take, the more rewards you can make. You can also, the more risk you take, the more money you can lose. Obviously, that's life is like a perfect balance, yin and yang. Where there's one, there's the offset. If you like, in fast cars, the more acceleration you have, you're cutting the top end, vice versa. If you're wanting to make more money, you have to take on more risk. That's part of the game in life. So with futures and with prop firms, you want to be correct and be precise and lower those drawdowns. Well, how? Because the oscillator here, the STC, if I'm going to make a trade and this says sell, guess what? If this is red, then I know that's a double confirmation. If we're up above this and this shows green, then that's a double confirmation. Now, these indicators could repaint at that given candle. I've set them to only confirm when the candle's closed. So guess what? Now I know my trend's confirmed because I've turned off the repainting. It's not going to repaint every time or like in that same candle. It confirms and then it closes, and that's fine because that's what I want. I know that I'm currently in that trend, and as long as I'm trading with the trend, my ratio to winning, or my probability of winning and success, is highly likely, higher likely to be successful. So the other key thing that I want to go over real quick is looking at your 15-minute time frame or your one hour time frame. If you're on a continuous downtrend in the 1 hour and 15-minute, like we are, then obviously I want to be taking more short trades than buy opportunities, because you trade with the trend. Anybody knows, and this is where a lot of traders will fail. If there's a retracement, pullback, and an uptrend, you get faked out. A lot of the traders do not understand that retracements happen. There's buying limit orders and sell limit orders that these hedge funds are setting their stop losses or their buy orders at to fake you out. Supply and demand zones are where those limit orders are set to go off at. Institutions are so large that they will not be able to fulfill 100% of their orders at one time. They have to do it in increments. So that's why you will see two double tops right here become resistance zones, because this is the area. This gave a change of character. Ignore that for a second. That's what this is. That's a change of character. It should have reversed, but it didn't, because there is a premium or a demand zone or supply zone that they had sell off at. So right here we had 1, 2, and 3 points that were areas that hedge funds were selling off of. The buyers came back in, tried to beat it. Hedge funds still were selling off. They did it again. Guess what? There was more contracts to be sold off, and finally it dumped and came down here. Now this is a supply demand zone where there's buying opportunity. That's where these guys are buying in again. These are not retail traders. They are hedge funds. You will never be able to produce thousands of contracts worth millions and millions of dollars. If you get good enough and you become a millionaire, possibly. But hedge funds, banks, financial advisory firms, all of these guys are right here. You're in between. If you can catch here to here, guess what? You're profitable. That's all that matters. Don't try to catch here all the way down here. Chances are it's not going to happen. Yes, guess what? These areas show that. Pinpoint. These are painted after the fact, showing you now this is the supply zone. Anything can change in between here and here. And that's why you get faked out, because you're looking at past overall zones, but there's also internal zones. Internal zones are what happens in between. You do not want to be caught in a retracement and in the wrong direction. If the trend is overall down, look for 50% pull back or 50% bounce, retrace, and take off again. If you're trying to trade at a retracement, say this thing goes up, you're like, oh, okay, now we're a bull. It's going to reverse, then take off. Remember that. There's always a pullback or a retracement on any trend. If you're a bear, which means you're a short seller or you're coming down, there's going to be a pullback to the upside. That's not the time to get in. Let it ride back down. You don't have straight lines. If you did, you would just have one big market going one direction all the time and then one direction the next time. That's not how it is. These choppy zones are internal, change of characters, break of structures, everything's going on. It's like one big auction, and people are trying to fight for the price action to reverse in their favor. Institutions and hedge funds and all those big wigs or big money are the key players that keep these zones here and here. You want to be in between. If you can trade here to here, perfect. If you can trade here to here, perfect. If you can trade here to here, good. That's the goal, is catching the train, riding it to the next stop, and hopping off and making it your day of winning. You're never going to trade from here all the way down here or here all the way down here. All this that happens in between will fake you out, and you'll psychologically exit your trade or whatever the case may be. You will never say, well, I'm going to buy or sell here and buy back here, because anything in between can happen at any point. This may not have been here. This could have reversed. The goal is to know supply and demand zones, which I pull over on my other TV here. I watch the supply and demand zones, and then I watch the 15, 1 minute, and 5 minute charts using these indicators. If I catch a green zone, I'm buying here, setting the stop loss. If it goes down and I lose, good. Guess what? I'm just waiting for another buy opportunity or sell opportunity. The 1 minute, as you can see, here was a fake out. But was it really a fake out? You probably would have got stopped out right here, most certainly. At least if you're at a new beginning level in a prop firm, you don't have much to lose, so you would have got stopped out. If you have more of a bigger account, you can have a bigger threshold on setting higher or larger stop losses, because you know eventually the trend is going to go in that direction. Overall, we were in a downtrend. This was a pullback. That's fine. If you sold here for some reason because this told you to, I'm gonna confirm if this candle or this indicator comes through. I have to have a second series of candles to start riding the trend. So I would have stayed out of this. This right here, this oscillator, helps you confirm this turned green. So guess what? That's not a good short. Right here would have been. If this went off, didn't give me a buy indicator. Now the candle broke through the ribbon. Now it's selling time. Sell from here, right here. 78.31 down to 78.23. That's a good 10 cents. That's a good, just one contract, $100. Right here, if it broke 30, 40 cents, guess what? That's a couple grand. Right here, if you think you're going to buy right here, there's no buy indicator. There's no buy indicator. This was green. Sure, you could have done it, 78.05 to 78.12, but to keep, and this is sideways action, so to keep you from losing money or stressing out, just ride, wait. There's going to be consolidation and a squeeze coming up. Boom, right here. This gave us a buy. Even if you got in right here, 78.15, you made $10. But a tight stop loss or tight profit would have kept you, okay, break even. Let's just wash that one. Let's move on to the next one, a sell. Boom. Got in at 70. Let's just say you finally got in at 78.08. Came down here, started touching 77.98. That's a good move. Right here, wait. It could be sideways because there's no buy signal that came in. You could, and then just set your stop loss right here. But these are Heikin-Ashi candles, so they're eventually going to touch the last candle anyway. So your next candle, if it opens up here, it's going to come down here. If it comes down here with the wick or whatever, it's going to stop you out. And chances are it will stop you out. You have to set down here. Well, that's a big stop loss. And it could come down here, bounce off, and take off. Now you just stopped yourself out. So you have to trade with the trend. And as you can see, this is like hindsight. I'm telling you, trade with the trend and ride the train. I'm telling you to set tight stop losses, because regardless, these big opportunities are going to come and hit you before you know it. Yeah, this probably would have got stopped out. This wouldn't have got stopped out. This probably would have got stopped out, but I told you how to reduce getting in and getting faked out. This would have been a nice buy, nice profit. This one probably not as good. Good one, good one. So as long as you have bigger winners and more winners, you could even say 50-50. If you have 50 losses and 50 wins, as long as your 50 wins are way bigger, double than your losses, then you're a profitable trader. I'm telling you that using the larger time frames to see where your overall trend is will even reduce these fake outs right here. I knew we were on a downtrend. Eventually it crashed. Could have picked up money here, but guess what? We're on a downtrend. So it was only a small retracement, and then it crashed big again. Look at your 15-minute even. We're on an overall, we're crashing down. Here's some sideways, not a reversal. Here's some more downside. So if you're trading here, 79.11 down to 78, that's huge win. If once you become your winnings in your prop firm account become much larger, you can trade longer candle or time zones and take bigger moves, because now you have a bigger threshold of drawdown that you can partake, because the static, they want you to lose, they only allow you to lose, I think, negative 800 or whatever. Well, if you're up 5 or 6 grand, that's 5 or 6 grand you have to come down before you have to worry about that level. So now your stop loss can be at 1,000, 1,500 or whatever, and that's a good room to let the candle work in your favor. Yesterday or the other day, I had a trade and rode into the next day, but I am up enough to allow this to happen. I was down $4,500. That's okay. That's all it went to, 4,500. Yesterday, when it started going in my favor again, now I'm up 20, whatever you saw on the, it's a 1,600. As you can see, here's most of my trades. So 1,600. So I'm up 1,600. Down 4,500. Overall, now I'm back up 1,600. That's not a good risk to reward ratio, no. But I knew that it would eventually trade in my favor, and it did. So that's all I'm getting at. Why are you wasting or risking your own capital in this type of economy? If you do not have the type of a capital to start, it's going to take a very long time to make the kind of money that appeals to you, but the goal is to start making money. So all I can say is, whether you do your own trading with your own money or use prop firms, be consistent, start doing it today, because if you keep putting it off, guess what? You're just going to go and go, and the next day and the next day. The next days become months, then years, and now you're just so far behind. Start doing it now. Even if you have $50, put it in Webull or something. This is not financial advice. This is just saying my personal self. I'm never providing financial advice, but start trading, because my goal here on this YouTube channel is to help you get to where I am. Living comfortably. Inflation, yes, it sucks, but I'm not hurting paycheck to paycheck. I make consistent money. I know how to make a couple $100 if I have to, and I live life. I may be working 2 hours a day, if that, and guess what? I get to live life. That's all what life is about, living it, not sitting here on the computer all day trying to figure out the next $1 million strategy that works or whatever. If you can take little by little, I always tell people, just compound your position. If you're making consistent money, it doesn't matter if it's on RSI, stochastic, slow stochastic, MACDs, all the other indicators, Ichimoku clouds, whatever. None of that matters as long as you're consistent and you're winning. Guess what? Then you just have to figure out, okay, well, if I'm consistent 9 times out of 10, now I can place bigger trades. Now you're making more money. That's it. There's no holy grail out there in the trading world or investing world that says this is the best way to do it. It's what works best for you, the most consistent way, and then you just compound your positions into bigger trades. That's all. Because when I first started trading, $9-10 a trade or a day was good. Now I can make $1,000, $2,000, $3,000 a day. My goal is eventually make 10 to 20 a day. That's my goal. So anyways, I'm going to be probably sticking to these 3 indicators, or the 2 indicators, the oscillator, and okay, 3 indicators, the smart money, to understand where the supply and demand zones are. And that's it. I'm not going to be bouncing. You're not going to see any more YouTubes of me using Ichimoku Cloud, testing other trading things, because guess what? I found the one that works for me, and I'm going to be sticking to that one. That's all that matters to me. The goal is to help you guys become better traders. That's all I care about. So anyways, if this video helped, make sure you give it a thumbs up, like it, comment. If you've got any questions, I'll get to you. And until then, happy trading.